Hello and good afternoon. Welcome to HYCM's online trading workshop with myself, Giles Coughlin. I'm the Chief Currency Analyst here with HYCM, and we're going to be looking for the next hour at some of the moving market events that have been happening in the last couple of days. And we've seen some quite extreme moves in the market recently. We'll just be unpacking that, making sense of it. And on top of that, we're going to be looking at some opportunities that are potentially coming ahead for the rest of the week. So before we get going, just wanting to make sure that everyone's clear that you can hear me okay. So if you could just put something in the question. Yeah, thanks, Daniel. Thanks very much. Hi, Sammy. Good to see you again. Tan, Arsalan, welcome, Ilkam. Yeah, good to see some new faces here as well as our regulars. Super. Now, just to make it clear that on this disclaimer, it's making it clear that what we're going to do for the next hour is all about education. It's all about explaining how I'm seeing the market as a professional FX trader, so that you can, as it were, by looking over my shoulder, you can begin to see how do I make decisions, how do I make, how do I make currency trades that I'm educated in, and that I understand why a currency pair is more likely to move in one direction than the other. Basically, it's making sense of the market. So that's what this workshop is designed to do. And during the course of the workshop, we'll be looking at different currency pairs, different potential entries, exits, and all of it is designed as education. So this isn't meant to be trading advice. I'm not a signal service provider. I'm not providing signals for you to copy. Instead, what I'm trying to do is to inform you guys how I make my decisions in order that you can begin to make informed decisions for yourself using the same principles. So without further ado, just going to outline the session ahead. And the first special topic we're doing, this will be at the end of the session today. We're looking at varying spreads and their impact on currency pairs when we're trading. The spread is the difference between the bid and the ask price. Whenever you take a currency trade, you'll always see two prices quoted to you, a bid and an ask. The difference between those two is the commission which you pay to your broker in order to execute the trade. So I'm just going to be looking at that in a little bit of detail to help us to know, which currency pairs should we trade, and when to be very wary of trading a currency pair if that spread becomes very wide. So we'll be looking at that at the end of the session. Email suggestions for any future topics you would like to my email here at giles.coughlin@hycm.com. And if there's a real interesting topic that you've got, email it to me and we could maybe look at covering it in the coming weeks. So that's just to remind you of that. And don't forget the handout. If you go to your GoToWebinar control panel, there is a handout for today's workshop, and that handout looks just like this. And you can see that it's the reference to the varying spreads, and then we have this 1, 2, 3, 4, 5 headings in bold, and these headings in bold are designed for you to print out and put by the side of your computer screen, because what they do is they sort of provide a little bit of a guide for you when you're coming to trade on yourself, to have a skeleton, an outline of how you should be structuring your trading. So there's got 5 major topics: looking back, looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. They are the key things to use, and that is designed for you to print out. So do print it out, put it by the side of your desk. We'll be going through that today, and I will show you how we go about forming that picture and how we use this handout. This is things that I've internalized now. I just do these automatically without thinking, and by doing that, it's helping me to be consistent and keeping the same approach to the market each time. So hey guys, hey Nadir, hi Trib, good to have you here. Return to our handout, we've done that. And the first thing to do on the handout, you can see it's the look back. See, what we always want to do is we want to identify recent sentiment by reading up on the last two sessions. And we want to identify the key market sentiment. And that's the, what's impacting the market at the moment. And then can you summarize that sentence in a sentence or two? Now, today, that's been really simple for us because the recent sentiment has been impacted by the US-China trade talks. So that's the simple part. However, there's nuances within that. We see ebbs and flows. And that will come out today, as we've seen an ebb and flow in a risk on and a risk off trade, as we've seen the market oscillating. So it's going to provide a good learning point for us again. So I hope this is going to help us. Just to make it clear, as we look back, the big event was yesterday as the US-China trade war intensifies. I'm just going to give us a very brief rundown of what's happened here in the last couple of days, so that we can see, where we're at. It was last Friday when the United States, they placed tariffs of they placed tariffs on, rather, $200 billion worth of Chinese imports. They went up from 10% to 25%. So that's a huge jump in tariffs on a number of Chinese imports. An import obviously is something that's coming into the United States. It's being imported from China to the US. And China said, well, we're not happy with these tariffs, so we're going to set our own tariffs on 5,000 US products. They identified 5,000 US products. Some of those products they were putting a tariff of 5% on, and then it was 10, 15, and 20%, right up to 25%, the maximum tariffs on the US products coming into China. So they've hit back. And that happened yesterday. It was expected that China would hit back. And so when that happened, we saw a further deterioration in risk. And for those of you guys who are regular, obviously we saw Japanese yen and the Swiss franc appreciating on that risk off tone. Now, China further stated that they may stop purchasing US farm products and energy, as well as reducing Boeing orders. We saw a large fall in Boeing stocks yesterday, and you can see it's actually just worth pausing a minute just to show some of you regular guys, how the method I've been using, combining fundamentals with technicals, and this is just a really good example of showing that again. And I'm going to show you, some of you guys, the impact of that information on the Boeing chart. So this is just getting the Boeing chart here, and we're just going to see that. I'm going to see how price moved on that news. So here's the chart on the Boeing chart. This is the Boeing, didn't mean to do that. Now here's the Boeing chart. This was the 15-minute chart. This was obviously the break of the news. Price just gapped down on this news, and it sort of hit the resistance point. It was tested against the support level, moved down to the next pivot point, broke that pivot point, moved down to the next one, and you can see that price retraced a little bit before moving to the downside again. So you can see that, if you miss the initial news, the initial spike, which went down to the first pivot point, you got to return to that pivot point, and then another 1, 2 pivot points that were moved on the downside. So just for those of you who are new, that won't make a lot of sense, but for those of you who are regular, you'll begin to see, how we combine the fundamental news with the technical news. That came out yesterday, very strong sell sentiment for the Boeing shares there. Then Donald Trump last night in the Asian session said, we will know in 3 to 4 weeks if talks with China will be successful, and he feels that they will be. Now, this comment of Donald Trump kind of gave a little bit of relief into the market. We had some big equity falls overnight in the US session. The Dow was down, the NASDAQ was down, S&P 500 had its largest fall in 4 months. there was a lot of big equity falls. US stocks were down, European stocks were down from yesterday as well, and it was basically a sea of red. So if there's one thing we know about Donald Trump, is he really hates to see the US stock market falling. So with that fall, he's come in at the overnight session and he said, well, you know, we'll know in 3 to 4 weeks if talks with China will be successful. Now, remember, these tariffs that the US placed on Chinese imports would take around, you know, they will take around 3 to 4 weeks to come into play anyway. Okay, that is very significant. I'm just looking at some news coming out here on Reuters. There's some Brexit news that's coming out. I don't think it's anything particularly market moving. Just caught my attention. There was a big swathe of information that came out. I was wondering if it was useful for us. I don't think it is, so we'll carry on. So this is the significance, is it's going to take 3 to 4 weeks for those tariffs to take impact. So Donald Trump has really reassured the market, saying, well, you know, I hope that we'll be successful and feel that we'll be able to sort it before the tariffs take effect, and he's confident they'll be successful. Now, that resulted in some relief in the overnight session. Some of the yen selling, some of the yen purchasing that have been going on reversed, and the US dollar Japanese yen pair recovered from overnight lows of 109, and it recovered up, you know, a good sort of 40-50 points. And this is why, because people were thinking, okay, Donald Trump doesn't want to escalate the trade war. Now, whether he can avoid it or not is a different question, but that's what happened overnight. Then overnight, we had China Global Times saying that China may release additional retaliatory measures. That's something to be aware of. That's the last little bit of information that we got from the overnight session. There may be additional retaliatory measures. And China's declined to comment on US Treasury holdings. Now, this is an area that people have been concerned about, and it's that China currently holds $1 trillion of US debt. It is a big purchaser of US Treasury holdings. And what some commentators and analysts have been reminding the market is that if China did sell US Treasury holdings, it's a way of striking back at the US. However, most people think they won't do this because it will also harm their own economy as well as the US's economy. So it seems a very, you know, a very extreme and high risk measure, but it's something to be aware of because people are talking about it. The next thing is Donald Trump. He was tweeting earlier in the session. He was saying that China buys much less from us than we buy from them, by almost $500 billion. So we're in a fantastic position. Make your product at home in the USA, and there's no tariff. You can also buy from a non-tariff country instead of China. Many companies are leaving China, according to Trump, so that we're more competitive for USA buyers. We're now a much bigger economy than China and have substantially increased in size since the great 2016 election. We are the piggy bank that everyone wants to raid and take advantage of, no more. So these kind of comments coming out from Donald Trump are not going to help the China-US trade talks. And we have really moved now away from the idea of the talks and discussions to it being a trade war. That has definitely increased. And here is a report from Google on the number of news sites mentioning the words trade war in Chinese language media. So looking at this, you can see that there's been a huge spike in the reference to trade war. Apologies there. And I think that is reference to how this has become much more serious. There is a potential for quite a big slowdown in global growth. So that is going to be a big concern for the market. It's really kind of consuming everything at the moment. No one can really see past this US-China trade war. And on top of that, we have, you know, Brexit seems like a sideshow compared to the US-China trade war that's going on at the moment. However, Brexit negotiations are still going on. What Theresa May is trying to do, she's been trying to get cross-party talks between her party, the Conservative Party, and the opposition leader, Jeremy Corbyn. He's the leader of the Labour Party. And what Theresa May's been trying to do is to get an agreed approach to take to Parliament. She struggled to get her deal voted through. She's hoped that she could maybe do it with Jeremy Corbyn. The problem is that looks very unlikely. Jeremy Corbyn is really wanting a general election. He's not wanting an agreement. So there's been very little ground given by both sides. It's not an easy marriage, and it's a very hot topic to actually solve. So there's not that much hope that they'll be able to reach a consensus deal. So what Theresa May is considering, she's considering giving members of Parliament definitive votes on different Brexit options. So what she wants to do, she's going to ask MPs to rank different outcomes in order of their preference. So then the idea with this is that you don't necessarily need a majority. All you need is which one is most preferred option. So that'll be things like a Norway deal, even things like a no deal Brexit, remaining. All these different options will be laid out. We see with oil at the moment that is stuck between two narratives, and the difficulty with oil. Now, I said this yesterday on the workshop, the webinar workshop. We were looking at oil as it's breaking out to the upside, and this is the two narratives that there are. There's some pressures on oil to be bought, and there's some pressures on oil to be sold. We've also had OPEC just come out with their monthly report, which I saw come out in the feed, but I haven't had a chance to read yet. But this is this twin narrative, and you see the price was coiling and concealing up into this triangle. And I said in the webinar yesterday that this was the area I was looking at. It was this level here, this pivot point, just seems such a key resistance level. And it wasn't making sense what was going on here. And the bit that wasn't making sense was that there's these two kind of issues going on. We've got US-China trade concerns, and just to remind folks, this is the world's GDP. And in the world's GDP, China takes about 15%, US is about 25%. So between those two countries alone, approximately 40% of the entire world's GDP comes out of US and China. So this trade war will obviously slow down global growth, because if China and the US stop selling to each other even, and make it difficult for other countries to buy and sell with either of these two countries, it's going to slow down growth, and in turn that's going to slow down demand for growth, and it's going to slow down demand for oil, because with not much growth, there's not going to be so much building, not so much construction, not so much money, there's not going to be so much travel, and so you can see how it affects oil. So looking at US oil, it's been in the news a lot. Now, there's two different factors. There's factors to sell oil and there's factors to buy oil. That's why it's kind of stuck in this kind of funny crossroads. Okay, you can see on a technical chart. This was from yesterday. Now, to sell, you've got the US-China trade concerns, and you've got a reminder from the International Energy Agency that 34% of all oil consumption is from the US and China. Okay. So we saw that, nearly 40% of all the world's GDP comes from US and China. Well, the International Energy Agency tells us that 34% of global oil consumption is from the US and China. Okay, so very important. If they're at war with each other, that's going to reduce the demand for oil. Sell factors. The buy factors is there's falling oil supplies from Venezuela and Iran. And there were a couple of Saudi tankers that were sabotaged off the UAE coast. This is part of the escalation of difficulties in the whole region. We've got difficulties with Iran and these Saudi tankers being sabotaged. And today we had some unidentified drones attack two pumping stations belonging to Saudi Aramco. Apparently there was limited damage done. However, but there has been a pipeline closed just to be on the safe side. So looking at oil, you can see it's stuck. It's stuck here between those two levels. And this was you know, the trade I took yesterday was selling off that pivot point because of the reasons I outlined, because price was moving up to the pivot point, but as it was moving up, as the US-China trade war was getting even more intense. So as I was looking at that at the time, I could see price coming up to the pivot point, and I thought, no, this doesn't make sense, this rally in oil, because oil's rallying, but US and China are having a more intense trade war. That's going to affect demand. So obviously it's these twin stories that have been playing out, and you can see here that the triangle was sort of broken to the downside yesterday. But you see, if you look below, you got these quite heavy support levels. Support 1, 100, 200 exponential moving average. So that's a heavy support that's just below. We also know that looking at our seasonal months, that that's from another day. You can see that May seasonally is not such a great month for oil. This is oil, the average price of oil over the last 20 years. You can see that oil is a very seasonal commodity. There's times when it's sold and there's times when it's bought, okay? Production tends to pick up in February, March, April. You can see here, generally speaking, February, March, April, these 3 months, you can see the oil's being bought. And then you can see October, November, December, generally oil's being sold. So we're in May. It's a mixed month with some, strong months, but also some weak months in amongst it. And that was the trade I took. That was on my chart there. Just sold it at that pivot point. This is the daily chart, the pivot point I was selling. This is the 1 hour chart. Just sold it on the top, and I took profit down below. And the reason I took profit and didn't wait for any more was because of Donald Trump's positive tweets overnight. So I took that as a dialing back risk, and the market was reassured, and I could see some risk of oil appreciating on the back of those Trumps without any clear further moves to the downside. So that's where we got oil at the moment, stuck between those two narratives. I'll just have a quick look at the chart to see how we're doing now, where it is. Just having a look at that. Yeah, and you can see it's coming back. Price is coming back into that triangle. It's just sold off that trend line, but this kind of area is going to decide what happens. Looking for a clean break of this area before initiating any more longs or shorts. I'm flat on the market now, just waiting to see if the trade war develops further. If the trade war does develop further, we're likely to see more downside in oil. See, there's a series of inside bars. It's a false break, a series of inside bars breaking down through the near-term resistance, through the technical, and we're looking potentially for more downside. So if you're convinced that there's more downside ahead, an obvious place to put your stop will be just above this pivot point here, okay? And you could potentially target the pivot points down below, obviously with major support expected at S1 and the 100 and 200 exponential moving average. You would expect to see some bounce from those levels unless there's a key catalyst just to push them right on through. So quick learning review, which currencies will move during risk-off times? I do this with you guys a few times. There's nothing like repetition for learning. So just let me know which currencies will move during risk-off times. Just type it in the question panel. Tell me what currencies you would expect to see moving. The control panel is just on the right-hand side, and that's it. Yeah, super. Well done, Tribhuvan. You got that spot on. Yeah, well done, Sammy. And the other currency? That one's right. Can you get the other one as well? Yeah, also see some US dollar strength as well in a risk-off move. US dollar can appreciate. Yeah, that's it, Sammy. Well done. Japanese yen. You're getting it. That's good. Okay. and which currencies, so the Japanese yen, Swiss franc, US dollar tend to appreciate. Which currencies tend to depreciate? It's some of the higher yielding beta currencies. Yeah, well done, Sammy. Which currencies will tend? Yeah, the Australian dollar. And the Australian dollar, particularly at the moment, because of its connection with China, 30% of Australia's GDP is made up of the Chinese economy. So what's good for China is good for the Australian dollar. What's bad for China is bad for the Australian dollar. And often the Australian dollar is traded as a proxy currency for the yuan. Okay, instead of trading the yuan, traders will trade the Australian dollar as a proxy for Chinese currency. That's just something to be aware of. So that's good. We'll just go through some more. Yeah, well done, Sammy. Yeah, excellent. So risk-off markets that depreciate during risk-off times. So when we're in a risk-off environment, as we have been in the last couple of days, we see the pound, see the yen rather, and the Swiss franc appreciate, and the US dollar. Okay. And then we see a falling Australian dollar, New Zealand dollar, and Canadian dollar. These are known as the commodity currencies, okay? We'll also see the Nikkei falling, okay? These are some of the key indicators, some of the key flows that happen during risk-off times. And this is what we saw this morning in the European session. We saw that New Zealand dollar and Canadian dollar had kind of appreciated, and the yen and the Swiss franc had depreciated. And this was because there was a bit of relief about Donald Trump's statements. There was relief that Donald Trump was dialing back the trade war rhetoric. So that's why we saw some reversal. The yen that had been very strong, we now had a bit of weakness along with side with the Swiss franc. So risk direction will now be determined by next trade talk developments. That's where we are at the moment. We're at a very vulnerable point in the market. There's been a brief pause from yesterday's strong sell-off, some relief in the Asian overnight session, and the market's trying to really establish which way do we go from here. Is it more risk off, or are we going to return to a little bit more risk on? Are we going to see a relief rally? Obviously, no one knows this information. But the key to trading at the moment is to know this story constantly. Where is it at? What is the story driving the market at the moment? What is it that really should be focusing on? So that's so if you had to put in a sentence or two, how would you put this into a sentence? Have a go on the question panel. Looking at, just as we're coming out off the overnight Asian session into the European session, how would you put that into a sentence? Have a go. Try and see if you can articulate it or say, just have a type in the go on the box. What the sentiment, remember the mood of the market. Remember the mood is just like a person has a mood, the market has a mood. What mood would you say the market is in? I'll give you a moment just to type it in, see if anyone can have a go at this. It's a bit trickier. Yeah, good. Nadir, Sammy, I like it. Both of you have picked up on two important aspects there. Yeah, Nadir said China trade war. Yeah, absolutely. Is that the theme of the market? Yeah, for sure it is. Super. And changing. Yeah, exactly, Sammy. That's the mood of the market as well. It's a China trade war, and is it changing? Question mark. So you guys have absolutely nailed it. That's exactly what you wanted to do. You've got the main theme. You can see what's dominating the market, and you can see the yen, Swiss franc, commodity currencies are going to be on your radar now, depending on which way the mood blows. We also had a Fed speaker out, Fed Williams. He just essentially said that the Federal Reserve is in a good place. He didn't change, nothing he said changed in the overnight session, and essentially he is sticking to the Fed's message of we've paused, we're data dependent, we're waiting and seeing. So nothing there to particularly change anyone's mind from that. So now we've look back. Okay, we've got a good sense of what's moving the market, and now we want to look forward. And the reason we want to look forward is we want to try and see, okay, is there anything that's majorly market moving that's about to be coming out in the next session? It's very easy, especially when you're starting to trade, to get caught out by significant events. And what I mean by significant events is you don't want to initiate a trade until you can see that it's got enough room to move without being interfered with by a big data point. So here's the calendar coming up for the next few hours. We can see that on Tuesday, today, May the 14th, the only other major report we've got is the Federal Reserve FOMC member George speaking. Okay, so we've got a Fed speaker on the wires, and then we've got some overnight data out for the Australian dollar. So that what it would tell us is, say we were wanting to trade, you know, you always want to be aware of what's coming up ahead. So the Australian dollar, this could move the Australian dollar, and then you start to want to put a figure together. Well, hang on, is the Australian dollar under pressure? Well, yes, it is. So you're thinking, if this was a good figure, so this came out as a real good beat, you know, 1%, something like that, we'd see the Australian dollar appreciate. However, you'd ask yourself, would that change the China trade war situation? No, not necessarily. So this could be a good data point to sell into. This is the kind of things you want to be looking for, and the kind of things you want to be having your eyes peeled for. We're going to look forward a bit further, and the number one issue to look at going forward for this coming week is, as Sammy and Nadir tell us, the changing China trade war. That's, you guys absolutely nailed it. It's the changing China trade war. What's going to happen? And now, when I originally wrote this, we had the imposition of Trump's tariffs. We've now seen a little bit of a heightened situation. And if the dispute worsens, we will see more flows into the yen, Swiss franc, and the US dollar. It's worth just having a little look at the US dollar, Japanese yen chart so we can see what and where we're at. Here we go. So right, here we go. Here is the US dollar, Japanese yen pair. Okay, this is a daily chart. Now, this was something that I marked on, just a very simple trend line. You see this trend line going to the downside. If we stay below that trend line, it's bearish. And, you know, if you were of the mind that, you know, okay, I think this trade war is going to carry on, I think that things are going to get worse before it gets any better, then this would be a very straightforward place to sell. Place a sell on at market here, and just put your stop above the trend line, and you could take profit down either at this support level or the recent lows. I would probably take support down at this recent lows of 109.32, and then the next target would be 109.10, which would be these recent lows, and then below that the next target would be 108.63, 64, something like that. There we have. And if you get some relief, if President Trump says, you know, I don't want to trade, we're going to get a deal, then we can look to define risk underneath this trend line. So you could get a pop up to the pivot point, and then you retrace down. So at the moment, I'm using this trend line just to define and limit my near-term risk. That's on the US dollar, a Japanese yen pair. And I'm just using that to see what happens with the US-China trade war deal. Now, I haven't got any positions on open at the moment, but I am looking at this area, and I'm looking at the news feeds, and I'm waiting for some clearer direction before I personally enter the market. Now, tomorrow we have some Canadian dollar CPI data. Now, this is interesting. And it's interesting because out of Canada recently, on Friday of last week, there was a really good jobs report. I covered it in the FX week ahead. And that jobs report was so good that I think it really kind of put some strong support underneath the Bank of Canada. there had been some talks about them, maybe cutting interest rates. They dropped their kind of hawkish tone that they've been having for the last, I think, 17 meetings. They dropped it last meeting and had more of a dovish turn. Then we had the jobs report, and the Bank of Canada has said that they're going to be data dependent, that they just took their sort of hawkish stance away because they thought we'd seen a slowdown, a temporary slowdown. And so the CPI data tomorrow, I'm really interested in that data, because if we get a good uptick in inflation, then we're going to see some Canadian dollar strength. So, that would be a good pair. Like say we're seeing some weakness in the yen, depending on what's going on with the US-China trade deal, a CAD-yen pair could be an interesting pair. So you always want to trade a strong currency with a weak currency. So if we get a strong Canadian dollar data, you might think, well, what's a weak currency? Maybe the euro. That would be maybe a good currency to pair it with. Say we got some weak CPI data and we saw weakness in Canadian dollar, then maybe a US dollar, Canadian dollar long would make sense. So always try to pair a weak and a strong currency together to try to give yourself a good bias for a trade. But that's one to look for in the coming week ahead. The next event to look at is the Australian employment data. You don't want to miss this one, because the Reserve Bank of Australia has said that they will be paying close attention to developments in the labour market at their upcoming meeting. Essentially, one of the key aspects of successfully trading is recognizing what issue it is that a central bank is focusing on. The good news is the central banks tell us. And the central bank has told us that they are focusing on the employment data for the next rate decision. So if we look, we'll just go to that data. Okay, I'll just show you this. This is the statement. This is the statement of the Reserve Bank of Australia. And in the statement, they outline what they're focusing on. And this is something for you to read. It's easy to read. All of it is freely available. You can just click on the monetary policy, click on the home page. You'll find links to the statement. And here, it's this last sentence. Has given this assessment, the board will be paying close attention to developments in the labour market at its upcoming meeting. So we know from the Reserve Bank of Australia that labour is a very, very key issue. Okay, what's going on with the labour market is a key issue. They've mentioned it. We've seen the monetary statement. So let's have a little look at the chart to see which potential charts would we have that would be interesting. So, okay, let's do a little bit of work here together. Let's imagine on Thursday that we get a really, really weak number. Okay, so we get a weak employment number. Let me just go to them. Let's see what's expected. So here we go. So this is on Thursday. This is the employment changes. 15.2K expected, unemployment rate of 5%. So say we get a really weak number. Say we get like minus 80,000, minus 40,000, something like that. The employment change, and the unemployment rate goes really high. An unemployment rate goes up 5.5%, 5.3%. If we got that big deviation, which currency pair would make sense to trade? Okay, and which direction? So if Australian dollar was the weak currency, which is likely to be a strong currency on Thursday? Which one do we think? Have a go in that. Have a go in the. Yeah, Daniel, Sammy, spot on. Yeah. Yeah, Nadir, a good one as well. Australian, Japanese yen, that's definitely a potential. If the trade talks are still going badly, then Australian Japanese yen would be ideal. Yeah, Nadir, Daniel, Sammy, I like all of your ideas. Yeah, Ifam, Australian dollar, Swiss franc, that is a potential. Again, the thing with the yen, the Swiss franc, and the thing with the yen and the Swiss franc is it depends on where the market is with terms of risk. So if it's really risk adverse, if it's big risk off environment, if the trade wars accelerated, then the yen and the Swiss franc will be strong. So an Australian Swiss franc, Australian Japanese yen short would make sense. But that's assuming that's the case. The US dollar, I think, is my preference for the simple reason that the US dollar is in a stronger position than the Reserve Bank of Australia anyway. They're kind of on a wait and see mode. The Reserve Bank of Australia is in a more, we may be cutting interest rates. They're slightly more dovish. So I think the US dollar is still one of the strongest currencies out there, because although the Fed sort of hit a pause button, they haven't turned to a dovish bias yet. Okay, so you think of the countries that have turned to a dovish bias: New Zealand, we've had Europe, we've had well, the Swiss franc still staying pretty bearish. So the US dollar and the Federal Reserve would be my preference. So let's have a look at that chart now. So we got some poor readings. So looking at the daily chart, okay. So what we'd see here, we can see price has tested that pivot point and is moving to the downside on the daily chart. So that pivot point would be a key area, okay, 0.69, it's about 0.6950. So 0.6950 would be a key area. Again, and then any return, let's have a look where that is in the daily chart. Yeah, any return. Yeah, any return up to this region here, 0.700, that would be a very key shorting area. Shorts from 0.700 and then have your stop could be just above that 4-hour 200 exponential moving average. That would be a safe, when I say safe, I mean that would be a place to have your stop, that if your stop gets taken out, you know you're definitely wrong. So let's look down the 1-hour chart. Bit harder to look at the 1-hour chart now, given the fact that the data's only come out on Thursday, so we can't really see anything. But the big level we've got, the obvious level, is this level here, 0.6950. So that would be my potential focus come Thursday. Now let's look at the other scenario, and let's imagine that the data comes out really, really positively. So let's say that the employment is like, plus 80,000, and the unemployment rate is like, minus 4.5, and we see Australian dollar strength. Now, if we saw Australian dollar strength, which currency pair, which weak currency pair would we want to trade it with? Okay, so if Australian dollar is strong, what's the weak currency? Have a go. I was very impressed, by the way, guys, with the last answers you've been given. It's way better than when some of you guys first started. Yeah, Ifam, spot on. I like that one as well. Okay. Yeah, I do like that Trivivan as well. You can definitely see that. Yes, there's been some weakness in that currency there. I'm not going to say it out loud until a few other people have answered. Yeah, so Daniel, this is assuming that the Australian dollar is strong. Okay, so if the Australian dollar is strong, which currency pair will we trade it with? Yeah, Nadir, you got the same idea as Chibivan. I like that. I like that idea as well. Okay, that's good, both of you. So well done, Chib, Nadir, Ifam. And as always, thank you for answering, Daniel. Now, looking at the answers, we had the euro and the New Zealand dollar. Now, I think they're both excellent. We've seen some weakness in the euro, and one of the weaknesses has been Italy again. Italy's, I think it was president this morning, was saying that he's quite happy to eat into the 3% deficit and go above the 3% deficit of the GDP. That's been annoying Europe for some time. He's just been coming out again saying, you know, we're going to annoy them further. There's more weakness in the Eurozone. We've had Donald Trump, haven't we, threatening tariff imports on imported European cars. That's very negative for the euro. If the US-China trade war keeps going, then we're going to see some more weakness. We're going to see exports dropping out of Europe. And a trade that I actually took yesterday was a euro CAD short, and I took it for for kind of the reasoning of like this Canadian data, this Canadian jobs. I thought, you know, Canada is doing really well at the moment. In fact, I'm seeing some quite strong downside in the euro CAD pair at the moment. We'll just have a look at it. I'll just show you. This is a trade I'm in. It's too late to join me in it now, but I just wanted to show you. Again, it's a logic that I want to show you guys so that you can see how making these decisions. You can see, like, you know, price is just in the euro CAD pair. You can see price was just kind of ranging. You know, you look at it on the daily chart and you think, well, look, you know, it's kind of ranging, it's sideways, it's not doing anything, but it was this key pivot point up here. And what I thought to myself was, oh, hang on, look, the euro, there's a lot of negative pressure on the euro at the moment. And not only is there negative pressure on the euro, but, you know, we had a really good jobs report coming out of Canada. So I thought I saw euro weakness and Canadian dollar strength. So any move to this upside, I thought, well, that's, you know, a really good place to try a short. I thought the anticipation for the Canadian dollar is going to be one of strength for tomorrow's CPI, and so I entered just at the top, and I entered just, you know, around this 1 point. I actually entered 1.5146. So I literally got the perfect entrance here, 1.5146. See if I can see it on the 15-minute chart. And I'm holding this one because, you know, yeah, I just got a perfect entry up here, 1.5146 on the overnight. I came to my charts in the morning and I've just moved it to break even because it's slightly speculative. And I knew we had the German ZEW economic data coming out today. And I thought to myself, well, you know, if that's negative, if that's bad, then we're going to see some more euro weakness. As it happened, it wasn't too bad, but other things have moved the euro today. So it's just kind of a currency that's, you know, in and out of trouble at the moment. So that was a trade in. Exactly the same principle, starting a weak currency, the euro, against, like, not saying that Canadian dollar is a strong currency, but a currency that has potential for strength. Remember, one of the things I've shared with you guys before is when you're trading, you always need to think about what's happening next. The market's always thinking what's happening next. It's this whole idea, you know, you're buying the rumor, you're selling the fact. You're always trying to be one step ahead of, because you want to get in as early as you can to get the best price as you can, and everyone throughout the world is trying to do that. So once you zone in and realize that, then, you know, moves make much more sense. So yeah, that's just a little trade I'm in at the moment. And then we have, yeah, we've got the employment data. So that they're the you know, the events that I'm looking at this week, and then my focus. Looking ahead, CAD CPI, got some US dollar core retail sales as well. I'm not particularly expecting much from those, but always worth being on your radar. We've looked at quite a lot of the charts for today, and again, looking at your risk. Now, this is very important, particularly in a market like this, where you could potentially get huge moves on very little. So just to be aware. You know, one headline could make a trade move at a big distance. So make sure you're not risking more than 1% of your account. That's basically a golden rule. Never risk more than 1% of your account on a trade. And I recommend that you trade without using leverage. So I trade an unleveraged account, and I will my maximum leverage I'll use is 1 to 2. Okay, so in my account size, my trade size matches my account size, okay? And I recommend the same. So if you have a $10,000 account, then your trade size should be 0.10 of a lot. So let your trade size match your account size. That helps you just to be a lot more relaxed when it comes to trading, and will help you stop making silly mistakes because you're not so attached to your trade. Okay, now we just get to the varying spread. Again, it's worth looking at, and its impact on currency pairs to trade. Now, the spread, for those of you who don't know, I'll just very briefly explain what the spread is. The spread is the difference between the bid and the ask price. So you can see here on this pair, we've got the pound US dollar pair, very popular pair to trade, and the bid price is 129,245 and the ask price is 129,250. So the spread is 0.5 pips for trading the pound US dollar pair. Okay, and that is the spread. Okay, now these spreads vary. So the difference between the bid and the ask changes. And the reason they change is because of different market environments. So let me give you an example. Say there's about to be, a really big news event that's coming up that's been hotly contested, very controversial. There's going to be some big moves in the market. Then you would see the spread become very wide. And the reason the spread will become very wide is simply because brokers are having to make a bigger spread in order to offset the potential gains and losses. So if those spreads were too narrow, all the people involved in processing the payments wouldn't be able to execute orders quick enough or to make sure the orders are profitable for the business. So that means that these spreads vary at certain times. Now, that means that we always worth having an eye on the spread whenever you're trading. So let's just, this is HYCM's platform. Okay, we can see the pound US dollar pair. Just out of interest, you can see it's dropping on some negative Brexit news. And we can see that it's just going to test that descending trend line. See that broken trend line? It was broken, and now we're going down to test it again here. First resistance, and then second resistance is here. So this is the key point here. Will price move through those lows, and then it's looking at down and more downside. So that's the pound. But here we go. Here is the bid and ask. Okay. So there's the bid and ask. So here it is: 129,168, 1.29177. So you can see the spread at this point in time is roughly 1 pip, okay, on the pound US dollar pair. So whenever you're trading, have a look what that is, because say that goes up to 2 or 3 pips, that's okay. But what happens if it goes up a long way? So let's look at a different currency pair. Let's look at the Australian dollar, New Zealand dollar pair. And now we go to one-click trading. And we can see here the spread is 1.0550. That's the bid, and the ask is 1.0555. So the spread is 4 point something pips. Okay. So that's quite different to the pound US dollar pair. Let's look at the Australian US dollar pair. Let's just open up there. All right, here we see that the Australian US dollar pair, the spread is just under 1 pip at the moment. It's 0.7, 0.6. Yeah, 0.7, 0.8, okay, roughly. So you can see, okay, Australian New Zealand dollar pair's got 5 4 or 5 points to trade. Australian US dollar has got only 1 point to trade. So you can see that, on a short scalp, for instance, you've got to think carefully which pair to trade, haven't you? Because, if the spread is 5-6 points, you've got to pay 5-6 points just to get to the market. So you've got to make 5-6 points profit before you're actually making real profit on your account. So those spreads are something to be aware of. So if you haven't been aware of them up to now, start getting aware of them. And the lowest spreads are on the most commonly traded currency pairs: pound US dollar, euro US dollar, dollar yen, dollar Swiss franc, okay, Australian US dollar, New Zealand US dollar, euro pound, pound US dollar. Those kind of core currencies are the ones that have the lowest spreads. Okay, here's an exotic currency here, US dollar, Hong Kong dollar, and you can see here that the spread is very large. Okay, you can see that the spread 78485, 78491. So the spread is like 5-6 points here on this exotic currency. Okay, so that again is something for you to be aware of. That is, we're approaching now the end of our workshop. Don't forget to join me next week on the 20th of May, I think it is. Yeah, it'll be the 20th of May next week, and we'll be FX week ahead, looking at what's coming up for the coming week. Okay, so please do join me for that. Also, please be aware of the offer that we do here at HYCM, and it's great to come along to these Monday and Tuesday workshops. I put a lot of effort into them to try to help them to be helpful for you guys. But if you're looking for something a little bit extra, just be aware of this offer that HYCM do. What they do is, if you deposit $1,500, you get a 1-hour coaching session with myself, and I help resolve personal trading queries. If you deposit $3,000 into your HYCM account, you get a 1-hour coaching session with me and 1-hour trading follow-up review. And again, deposit $10,000 US, you get a 2-hour session with me, 1-hour follow-up, and 1 week VIP support. The way the VIP support works is that I send emails, so you could email me any questions that you had about a particular trade, and I send you an email back. So just be aware that that is on. And of course, next week we'll have the online trading workshop, just like we did this week. That is on the same time, 1 o'clock GMT time, and the other workshop, the look ahead, is on Monday. So guys, we're just approaching the end of our session. I don't know if you guys got any questions. The main thing to really not miss this week is that China trade war sentiment. So make sure you keep on top of that. Keep looking at good news sources. Look at forexlive.com. Look on Reuters. Look on Bloomberg. They've got some free stuff. Just keep in line with it, and remember that this stuff can change very quickly. It's only one tweet from Donald Trump saying, I think a deal is going to be coming soon, or it's one message from out of China saying that they're going to do one course of action rather than another, and the market's going to move. So just to be aware of those moods, don't get caught out during this time. So thanks once again, guys. Yeah, Nadir, thank you very much. That you've actually reminded me. So big hand up to Nadir. The Australian election is coming up this weekend. So make sure you don't want to be holding Australian dollar positions over the weekend because of the potential volatility that we're going to see in the Aussie at the open. And again, we'll probably be covering this. Nadir, on the FX week ahead. I'll have a look and have a little read up over the weekend and see what we're doing with this. But look out for polls. Often FX moves are based on the latest polls, the forecast of what's happening. So big Nadir, big gold star for you. Well done for mentioning that. And take care, guys, and I hope to see some of you next week. Yeah, cheers, and you, Truivan. Bye, Nadir. Bye, Truivan. See you, Sammy. See you, Daniel, Efam. Take care now, guys. Bye.